Hello and welcome to this very special edition of Business Plus on Friday, where we have a special guest who's going to help us understand the various factors impacting our economy, the headwinds and the opportunities, as well as the growth drivers, which will help India withstand growing challenges emanating from a turbulent economic environment. Dr. Arvind Virmani, member NITI Aayog, one of the leading voices in the Indian economic policy space, has been an advisor to the Indian government at the highest levels for 25 years, including the Chief Economic Advisor, Ministry of Finance, and Principal Advisor, Planning Commission. I also have with me in the studio my colleague Rakesh Khar, who's joining us right here live. Let's start straight with Dr. Virmani. Dr. Virmani, thank you so much and welcome to News9 Live's Business Plus. First up, I'd like to ask you, and this is basically a look back question. We are at the start of the new financial year and the previous one just ended. So how do you look at the just concluded fiscal in terms of the overall macroeconomic environment?
I think we are on track. There's a timeline which was given by the Finance Commission, which the government had more or less accepted, and we are on track on reducing the fiscal deficit over the next 3 to 5 years.
Okay, and while the numbers are of course looking good, how do you see the current fiscal panning out?
Well, the tax collections have been equal to or more than what was projected, so I expect it to be on track or even better than was projected most recently.
Okay, we'll come to taxation in just a bit, Dr. Virmani, but inflationary pressures are rising globally, and in India too, inflation continues to be an issue. I mean, yesterday we saw, of course, the RBI kept the rates unchanged and has taken a pause really and has said categorically it's not a pivot, it's just a pause. But overall, how do you see inflation shaping up in the near term?
So inflation is the million-dollar question. People talk about a lot of factors, including interest rate changes, etc., etc. But to me, the most critical element is oil prices. So if oil prices stay, let's say, at or not much more than $80, you would have one situation. If they go up to $100, there'll be another situation. So really, that to me is the difficult part. So inflation in India will depend a lot on what happens to the rest we can manage. There's obviously a monetary and fiscal part. But the key external shock which is critical for controlling inflation is really the oil price.
Right, Dr. Virmani, we'll come to oil-linked inflation and the cut that we've seen by the OPEC plus countries in just a bit. But Rakesh, if I can shift focus to you. We saw, in fact, yesterday on our show, we had two very eminent voices, an economist, Karan Mehrish, as well as your friend, a senior journalist, Shobhamoy, both sort of alluding to the fact that the external shocks to inflation will actually not be as significant as the internal shocks arising out of food inflation. And that is what the RBI's MPC has also reflected yesterday. So, how do you see the two really playing out, internal and external shocks?
Couple of points, Karthik. One, that it's a big guest we have today with us. He has lots of years of experience. He was Chief Economic Advisor. I had an opportunity to interview him a couple of times then.
Right.
And then, if he's talking about global risks, he has done a stint at World Bank and IMF.
Right.
So I think he understands global economic scenario much better than any of us sitting here, including my friend and in Business Standard, who was a journalist who had a point of view. But very important, the RBI governor in his press conference yesterday did mention that essentially our discourse is driven by domestic perspective.
Right.
So in that sense, it has to be a fair balance. And if Mr. Virmani is worried about external shocks, we cannot discount it.
Right. So, Dr. Virmani, let me actually then come back to you with this, that with OPEC plus countries taking the sudden decision to cut production of crude, how much of an adverse impact is this really going to have on inflation?
Well, as I tried to point out, the oil prices will go down less than I had anticipated. Because as I said, I am an optimist, so but I've had to come back to 6.5. I haven't come back, but the upside, I believe there was an upside potential which in some ways has been dampened by this rise. and it's all related. You see, it's not that something will happen, then there will be a monetary policy response, there will be a fiscal policy response, etc. So the net effect on inflation, like I said, after all this management happens, would really depend on the oil price.
Right, and 6.5 of course is bang on, and that's exactly the RBI's growth projection as well, and pretty much in sync with the projections of World Bank, Asian Development Bank, and a lot of other agencies and a lot of other economists as well. And of course, like you've said, that it's going to be critical to watch out for the movement of fuel prices, and let's see what sort of per barrel cost and a per barrel price we arrive at. But you also mentioned fiscal policy. So how do you think the government sort of fiscal and monetary policy need to work in tandem with each other?
So the primary responsibility of dealing with inflation is with the RBI. RBI is fully aware of it. I have been on their advisory committees both under the previous governor and in this one. And in fact, one of the people who was my senior advisor when I was at IMF became deputy governor. So they are fully on board. They know how to manage. They've done a reasonable job, and I'm sure they'll continue to do it. As far as the government's fiscal is concerned, I mentioned to you that the government's fiscal management during the COVID and even during the Ukraine crisis has been excellent. I mean, I would certainly give an A to both. Those are the areas where the management has been very good. So we are in a good place to manage any future shocks related to inflation.
Right, we are in a good place. Rakesh, of course, Dr. Virmani is saying that the RBI has done whatever it could, and yet the core responsibility of managing inflation rests with the RBI. But to my understanding, Dr. Virmani, sorry if I'm disagreeing with you slightly, but to my mind, the RBI can only do as much in terms of tinkering rates.
Absolutely.
Isn't the responsibility of inflation equally split between the RBI and the fiscal policy under the Ministry of Finance?
Absolutely. I mean, I also tend to disagree with Mr. Virmani, but he's purely speaking from a textbook economics.
Right.
He is not wearing the hat of a politico-economist.
Right.
The truth of the matter is that, the political capital or the political dividend or the political liability of inflation management rests equally with the government.
Okay.
I mean, if inflation becomes an election issue, Karthik, the responsibility and the results and the consequences.
Inflation is always an election
absolutely
issue.
No, it's a question of how you milk it, Karthik.
Right.
I mean, last election, 2014, inflation was a big issue. You remember Prime Minister, then a candidate, said that, Diane Margai, he quoted the old Hindi Bollywood song.
Right. That's 2014 you're talking about.
2013, 14, that's right. Yeah. 2019, it was not as much of an election. So credit goes to this government that it could push off inflation from the agenda as an election issue.
Also because overall, I think we saw the slowdown, so to speak, begin to happen only in 2019.
Absolutely.
And towards the end of 2019. And then, of course, COVID took all the brunt of it, rightly or wrongly so. And then we talked about the K-shape recovery. But then again, a K-shape recovery from a rock bottom, negative territory to sort of, receding upwards. But then again, what else can the government do if there are both internal as well as external shocks, which are fairly evident right now, whether it is oil price, whether it is food inflation?
So on the fiscal side, the entire responsibility is with the government. That's, expenditure and the revenue management.
That's
These are the two core pillars of fiscal policy. So I think they've done well on the expenditure side. Public investment is at a very large high. I mean, that's one key factor which has been driving the economy.
Right.
But my worry again in election year, the government has to do a balance between issuing out SOPs, that's the expectation.
Right.
Under whichever category or cluster you put it. And then also being fiscally prudent. But now that is the big challenge. Fiscally, we're slightly again over the average or the comfort zone of both RBI and all economists.
Right.
And when the macro picture is viewed, this could be a challenge. But putting more money into expenditure for infrastructure versus thinking of a new scheme. I do expect that the government will probably hike the farmer quarterly outgo.
Okay.
And it has so far resisted the idea of UBIC, Universal Basic Income Scheme.
That's right.
But it could probably bring in an alternative because inflation this time, unlike in 2019, is indeed an issue. And the government, especially the Congress party, has been using it as one key plank. along with corruption.
But how bad is 5.2? 5.2 is a projection the RBI
Karthik,
gave
you and I
yesterday for
discussed
the year.
numbers. For the common man, word mehengai maar gayi. If it sticks, they're not going to look at numbers.
But something costing 100 rupees now going on to cost 105 rupees at a time when overall there is an economic growth as well at 6.5%. Is it a bad number?
So, academically, it's not a bad number, but when you consume your fuel, we have had a very high 110 rupees petrol in Delhi. So that is in recent imagination, and what is most important today is the food prices, the milk prices that each one of us is consuming is hurting the common man. I don't think the government will just need to could wish it away. It is a concern.
Sure.
It's a question of how you sort of say canvas this particular perspective in election as an issue and how it sticks out and what is the traction.
Got it. So you spoke about the government's fiscal responsibility, and we'll come back to that, especially on the tax collection front, which has been fairly robust. But let's go back to Dr. Virmani. Dr. Virmani, let's talk about exports. We'll come back to the fiscal story, but from a CAT perspective, let's talk about India's exports, and they've done fairly well. Service exports too have shaped up. But given the sort of all-round recessionary fears that we talk about, especially those coming from our western part of the globe, do you think that we'll be able to sustain this sort of tempo that we've arrived at on the export side?
Yeah, so the service exports is really, there are two big changes which again in 1921 we had indicated. One was this whole phenomena of work from home and work from anywhere, and the second was supply chain diversification. We've already talked about the second one, so so the work from anywhere is really what is setting this up, that our service exports are doing even better than many people anticipated, and this phenomena will continue. So here in a sense the change has already happened, across the world people are looking to India for new types of service exports because of this work from anywhere type of attitude which has changed. Like I mentioned, this contrasts somewhat with the production, which is slower for many reasons, because services there's less fixed costs, there's less sunk costs. It's very easy to change. If you have getting imports or getting somebody to do it in San Francisco or somewhere else, you can now with this work from anywhere, you can get it from the same person could be sitting in Portugal or India. So it's very fast. This has already happened and it will continue.
Okay, so exports of course is one side.
That's right. So there you have a recessionary trend, but you have this other longer term trend, and by and large on net we will keep doing reasonably well. Okay. That does not mean we will grow at the same rate. Obviously recession will reduce the rate of growth, but we will do better than others, because of the underlying trend.
Understood. I agree with you, Dr. Virmani, but let's just shift focus to something that Rakesh was alluding to earlier, which is on public investment. And public investment has injected, of course, a lot of robustness in the economy as well. And with the election year sort of coming up, do you see the government, the centre as well as the states really being able to stay the course on public expenditure, public investment? Yeah,
I have no doubt that stay the course. I don't know what you mean by that, but the capital increase is in the budget. We will implement it. The government will implement it because we know that this has huge multiplier effects. And as private sector has pointed out, they needed room for the capacity utilization to increase and for them to accelerate their capital expenditure. So government is committed to it. It will happen in this year. That's all one can talk about. What happens next year we'll discuss.
Right. So that's what I meant by staying the course, Dr. Virmani, that it has continued making public investments and it is likely to continue to do so, hopefully, because those announcements have come in the budget as well. But on the demand side, how do you see the situation now? Especially, we talk about two eras. There's a pre-COVID era and there's a post-COVID era. And there's a lot of talk about this pent-up demand. And do you think that pent-up demand has finally exhausted? And in the same light, I'd like to ask you, rural economy has not yet fully recovered, so to speak. So what are your comments on that, Dr. Virmani?
So here is where I think people are, I wouldn't say wrong, but limited. You know, a lot of people are stuck in COVID. Now, COVID had serious effects on the world, on India, but we would have come out of it in 22-23 after the second wave, but for Ukraine. So what they are not seeing is the compounding effect of Ukraine on the post-COVID recovery. So to me, those who do not separate out these effects or see them clearly will get the projection wrong. So to me, it is not just COVID, it's the oil price. It's the big increase. If everybody has forgotten, last year oil prices touched $120. That's disastrous. Okay, luckily they didn't stay there. So the effect of that is on consumption. Everybody keeps saying private consumption is weak because of the poor and less well off have less income, but that would not have been true if oil prices had not gone up. So they are still attributing that to COVID. I think that is wrong. That's wrong analysis. I'm not saying that's not correct analysis. The correct analysis is there was a COVID effect on current. I'm not talking about the savings and wealth, that's a whole different subject, but the current effect had gone, and if Ukraine had not occurred, you would have seen a complete recovery in private consumption. That has been delayed, and as I indicated to you in the context of inflation, that will depend on whether oil prices stay close to 80 or again go back to 100.
Okay.
If they stay close to 80, I have no doubt that private consumption will recover strongly in the next year.
Sure. Since you're speaking about, Rakesh, if I can get you in now, since we are speaking about oil prices again and we are talking about how much of a dent that is likely to make to the economy and to our growth per se. But on the export side, what are the sort of numbers that you were running through?
Well, it's interesting. We have a buoyancy in exports for the fiscal that has just gone
That's
by.
right.
But that's micro picture to my mind.
Okay.
Let me put exports from India in the global context.
Okay.
750 billion or 760 billion, as the minister said, that we could close possibly once we settle down the numbers.
Yeah.
Versus $36 trillion in the calendar of 2022.
That's right.
So because they follow the calendar. So it's not even a small 0 point some percentage.
Right.
I'm not trying to say that we should not have an aspiration. $2 trillion is a good aspiration.
Okay.
And what we must realize the challenges are. The first challenge is that wherever we have a head start, there is competition picking up.
Correct.
And then pricing advantage that we have is also under threat.
Okay.
So emerging economies are challenging us in the IT and the BPO sector. Similarly, in the services sector, where we are opening a big new window, there are some promises of this GCC, Global Capability Centers, where they have identified India, but that's medium to long term.
Right.
These are big ticket ideas, but they'll take time to come through. So in the foreseeable future, our balance of trade situation is going to be a little difficult.
Okay.
And if oil acts funny in terms of its pricing, we'll have to keep a watch and keep on sustaining and diversifying our export window.
Okay.
Now this one idea of one district, one export potential, linking export potential to each district is interesting.
Right.
There is an example in UP of UDAP, which I think we discussed
One
earlier.
district, one product.
So one product is being linked to an export scenario.
Okay.
How feasible it is, but at a vision level, I think it's a workable idea.
All right.
So on export, these are early days. Let's not get too excited, Karthik. That's the point I'm trying to make. I'm being positive, but put it in global context.
Sure. So let's not talk about exports right now. Let's actually shift gears to private investment and the animal spirits that we talk about. So, Dr. Virmani, why is it that private investment has actually failed to pick up as per government estimates?
No, I don't think government has given any estimates of private. I expected it to pick up in the second half of the last meaning, it's over now.
Yeah.
In the last fiscal year. Well, my sequence was a full recovery in contact services, which has happened, followed by a recovery in housing, which from whatever I hear is happening. Again, we don't have the full data because we don't get that broken up so much, and I expected private investment in industry and things like that to be the last to pick up. That may have been delayed by a quarter or two because of the point I just made, which is the effect of oil prices and Ukraine on private income and consumption, but given the stabilization, I would expect that to happen now in the next 2 quarters. So why didn't it happen? Because Ukraine happened. Nobody predicted Ukraine.
Right. So we keep coming back to external forces, and unfortunately, that's a reality today that we live in an interconnected world. Rakesh, I'll just come to you, but Dr. Virmani, if I can stay with you for a little while longer. Now, the ripple effect, or the sort of divider effect, the opposite of the multiplier effect of private investment not happening, is actually unemployment. And unemployment, especially in an election year, is bound to be a big issue. So how do you see this really panning out? And what are the short-term and medium-term solutions that we have at our disposal?
The myth that employment has gone down, there were of course fluctuations in the COVID time, right? But the latest PLFS data, there are now 2 articles or 3 articles, I think in the Times of India, by people whose research I generally respect. One by Dr. Bhalla and his partner, his co-author, and one by Dr. Goldar, Vishwajit Goldar, who is an old respected professor I know from like 20 years. In fact, he worked when I was at ICRIER. And those show actually that employment has gone up between 2019 and 21, if I remember was their last data, and it's gone up in manufacturing. And not only has it gone up in manufacturing, it has made up the decline which happened between 2011 and 2017. So this assumption based on little surveys and things like MSMEs, number of MSMEs during COVID, etc., is not supported by a full comprehensive survey which is now out. All the data is there. People who believe this should go and look at that data. It's all available. It's all on the website. You can download it, all the detailed data. So these 2 authors have done it, and they actually showed there is no real issue of employment. Again, let me say that there are temporary effects. There were effects of COVID, there are effects of oil price. So the wage rates may not, the real wages, inflation, right? Real wages is nominal wage minus inflation. Inflation has gone up due to external shocks. As soon as it comes down, real wages will go up. So the real wages may not have gone up, and for some categories may actually have been gone down, but it's not an employment problem. Employment has actually done very well, and the real wages will recover as soon as the oil prices stabilize.
Sure. I think one will obviously have to study the data like you mentioned, Dr. Virmani, but is unemployment really under check? Rakesh, are we in a comfortable situation as far as data goes on employment and real wages that Dr. Virmani just mentioned?
Dr. Virmani is talking about a certain period from COVID and post-COVID.
That's right.
It's been very volatile, the data,
correct,
as he pointed out rightly.
Right.
There's been some uptick, and it has coincided with the larger uptick in the economic cycle and the economic circle.
Okay.
But that doesn't take away the core of the issue. The core of the issue is that India is predominantly young country.
Right.
And that is supposed to be India's biggest advantage.
Right.
Are we playing to the advantage? Everybody, basic common sense would say that we are not. We're not. So what are we doing with our dividend, which is supposed to be a dividend?
Right.
I would say that it needs far greater attention, both from NITI Aayog, which Mr. Virmani is driving as a key thinker there, and given his entire experience, we need to sit with the industry, create a very emergency kind of a situation, and all this is linked to my mind to manufacturing.
Okay.
Unless and until services cannot drive employment, neither can agriculture. People are moving away from agriculture.
That's right.
So it's only manufacturing, whether you like it or not. Manufacturing, we are today a laggard.
Sure. So let's move to manufacturing, and let me take that question to Dr. Virmani. So, Dr. Virmani, my colleague Rakesh Kar here saying that we've been a laggard in manufacturing, but the manufacturing sector has also displayed some expansion, and especially in the month of March, due to overall increased productivity and the order book shaping up. In fact, even the S&P Global PMI, the Purchasing Managers Index, has risen to 56.4 versus, I think, 55.3 or something in the month of Feb, 1 month prior. So, what do you make of India's growth numbers, especially when we talk about manufacturing?
No, good and better. The actual number doesn't really matter. PMI is not like any other data. It's just a sentiment of X number of people. It doesn't measure it's not a scale. It just tells you that so many percent of the people surveyed are going to expand their business. That's all. It doesn't tell you how much they are expanding it by. So, but it's just an indicator which shows that manufacturing is doing much better than what people have been saying. Exactly, it supports my earlier point I made on employment in manufacturing.
Okay. Sure. So, of course, it's an indicator, and it's not really, it's based on a survey like you mentioned. But let's talk about the consumption side then. We are fairly okay as far as numbers go on the consumption side as well. So, we've seen car sales have reached a record high. Housing sales are looking good. Overall cracking what I think there's an estimate of a 14% growth in passenger vehicles. So, what's your outlook on consumption? And I'll come back to rural consumption. So, especially on the rural side, which seems to have taken a little bit of a hit, in fact, more than a little bit of the hit if you talk about two-wheeler sales, for example.
Two-wheeler sale is a very specific issue which I have been monitoring for the last 2-3 years, which in a way is indicator of the not of the economy as a whole, not of the recovery, but the losses suffered by people because of the pandemic, right? What happened during the pandemic? Those people who had wealth had a reduction in wealth. Those who had little bits of savings had to use up their savings to continue, despite the fact that the lowest income people benefited from the food, so it didn't affect their current income, but many people still had to dip into their savings. So really it reflects that effect of the pandemic on all Indians,
Sure.
Now if you see in the latest data, we are now finally beginning to see an uptick. Up till now the last but one data showed a decline, but there is now an uptick. So I am hopeful that this the problem is now over, right? Legacy, you can call it a legacy problem, right? You had this huge thing, there was a lockdown, there were all kinds of disruptions, people's had to shift, some people had to go to rural areas, go back and forth, some companies had to close, some could go on. So there was this huge disruption from which everybody suffered. So in some ways you could say it was a reflection of that suffering, but what the data shows is that we are finally beginning to come out of it. So the graph is definitely up. I expect this upward movement to continue,
of course,
and be reflected in this two-wheeler demand.
Sure. No, I hear you, Dr. Virmani. But let's actually move away from the COVID era, and hopefully that's behind us, and move to tax collection. So Rakesh was just speaking about the fiscal prudence which is required, which is the government's revenue and expenditure. But we've seen that both direct and indirect tax collections are higher than expected. They've beaten, in fact, even the revised estimates. And GST collections have jumped some 13%. Direct tax, individual tax collections have jumped some 24%. So tax collection numbers are auguring well for the government. Isn't that right?
Well, I think I've already said that the fiscal situation is good, and part of it is the very good fiscal and monetary management during the both during the COVID and through this oil shock of last year.
Sure. Now, I just want to quickly, in the interest of time, jump over to UPI, and this is something that India has really shown the light for the rest of the world too as well. And I know Rakesh is also a great proponent of UPI. I'll come to him in just a bit. But Dr. Virmani, take us through India's digital progress. UPI transactions volume, they are at 280 million transactions per day. It's a fairly decent indicator of India truly going cashless now. So what's the penetration like? What are the targets on the UPI front?
So I don't have any digital numbers or targets, so I cannot really comment on that. But I do believe, and I've written about this, that the digital economy is going to be a very important driver of growth over the next 3 to 5 years. Besides that, supply chain and the other things we've talked about, the services, supply chain, the digital economy, because that will really take the modern economy out into every area of the country. It just was not feasible. The combination of the huge highway program, which has happened, which you all know about the speed and the extensiveness, coupled with this connectivity and the entry of the digital economy is going to transform the rural and remote areas of the country. But again, it's a slow process. We have to get there. We have to make sure everybody is connected, and then you will see a big transformation happening. But again, it's like a exponential curve. There will be a period of build up, and then you'll see the huge transformation, which I would expect to see around about 3 to 5 years from now.
Okay, 3 to 5 years and the exponential curve. Rakesh, you are one of, I think, the biggest proponents of UPI and the digital dividend that India is enjoying at the moment. Take us through what are the kind of projections that you have for this entire digital economy to pick up?
I think the first immediate projection, it's right there in front of us, is the number of transactions.
Yeah.
So when we link it to the consumption story, who is transacting?
Right.
It's the ordinary Indian consumer.
Correct.
And so obviously when he's transacting, he's doing business, which means he's buying something.
Correct.
So in that sense, it's a huge indicator of the consumption story.
Yeah.
That's number one. Number two, I'll come to UPI later. On the rural economy and the overall consumption story, this highway project, the entire infrastructure push has also helped transmit money right to the bottom of the pyramid.
That's right.
So, we may not realize it at the front. We talk about a big corporate having backed that contract and making, made a virtue of it from the government point in terms of execution and for the corporate in terms of scaling up.
Right.
But it's also translating into a bottoms of the pyramid economy,
right,
which we're slowly, unfolding.
Right.
And, the challenge on consumption is monsoon. Which again, I think, is something that is in nobody's control.
Of course.
And weather is behaving very erratically, so we really don't know what is going to happen. On the UPI base, I think what India did right with this digital India architecture is phenomenal. The whole world is celebrating it. And there is not just noise, there's a lot of substance in this.
Right.
Because there is this criticism that too much of headline management, but this is truly a global success story.
Right. We've seen 17 countries adopt UPI now.
And again, these are early days.
Of course.
So my own view is that we have seen the front end.
Right.
When you talked about the transactions.
That's right.
We've still not seen the back end.
Okay.
See, the entire machinery in terms of business is unraveling as we speak.
Okay.
Because enabling these transactions is an entire ecosystem, what we call the digital economy system, digital economy ecosystem, which Mr. Virmani also referred to. I do believe, and I've read that experts globally are talking about this being a key driver for Indian economy going forward. We don't actually, figure it in, because we talk about manufacturing, we talk about, services, we talk about agriculture, which has its pluses and minuses.
Yeah.
This is unfolding, and the best part of digital economy, it cuts through the traditional barriers.
Right. Great. Cuts through the traditional barriers. Rakesh Kar, thank you so much. Always a pleasure having you. And thank you, Dr. Virmani. We are completely out of time, but your inputs and all your wisdom and experience comes to light every time that we are in conversation with you. So thank you so much for joining us.